The defining characteristic of the second quarter has to be the Fed realization that inflation has remained higher and more persistent and is even accelerating. And we first saw a 50 basis point hike in May, but that was followed by a 74 basis point hike in June, which is the first time that the Fed has hiked by such a significant amount since 1994. But as a result of the Fed's recognition of the issue, the stock market has performed very, very poorly. And for the first half of the year, the return of the S&P 500 was actually the worst it has been since 1970. However, that is balanced by the fact that on the, I believe it's 6 previous stock market declines of at least 15% in the first half of the year since 1932, these were followed by an average 24% bounce in the second half. It hasn't happened every single time, but interestingly, what we have seen so far in July is a recovery in the stock market. And at this point, people are, I think, really just trying to determine whether or not the aggressive pace of Federal Reserve interest rate hikes will push the economy into recession. And so we're really balanced on a knife's edge, impossible to predict, but as we say, the best course of action is to simply remain engaged for the long term.
The first half of 2022 continues to mark a major change in the bond market, with asset classes like U.S. Treasuries posting their worst returns since 1973. But beyond rate hikes, we continue to expect that forthcoming quantitative tightening will impact markets and liquidity. This is introducing headwinds in the bond market that we have not seen in years. It's very likely that investment assets will continue to experience volatility as interest rates rise in response to various central bank announcements. And also, we expect that these inflationary pressures will persist. The Sustainable Bond Fund has continued to maintain a very defensive position. We have invested a significant portion of the fund, around 19% of it, in municipal VRDNs. These securities always trade at par, meaning they don't have volatility in the prices, and the coupon fluctuates with the interest rates. This allows us to stabilize the NAV of the fund while still getting some amount of income. The Muni VRDNs also go to building more sustainable communities and cities, affordable housing, water projects in Utah, transportation in Southern California, and redevelopment of a city center in Colorado.
Performance data quoted herein represents past performance and is no guarantee of future results. Investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be significantly higher or lower than data quoted herein. Performance current to the most recent month end can be obtained by visiting SaturnaSustainable.com or by calling toll-free 1-800-728-8762. Please consider an investment's objectives, risks, charges, and expenses carefully before investing. To obtain this and other important information, which you should carefully consider before investing, about the Saturna Sustainable Funds in a free prospectus or summary prospectus, please visit SaturnaSustainable.com or call 1-800-728-8762.